Ladies and gentlemen, good day and welcome to the Wabag Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. I now hand the conference over to Mr. Rajiv Mittal, Chairman cum Managing Director and Group CEO of Wabag Limited. Thank you and over to you, sir.
Thank you. Good evening, ladies and gentlemen. We extend a very warm welcome to you all to this earnings call post announcement of Q1 FY23 results of Wabag Limited. Joining me today for this earnings call is Mr. Skandaprasad Sitaraman, our Group CFO. To start with, this has been another successful quarter for us with our journey of profitable growth continuing in this quarter as well. We have had to counter cost headwinds coming from the commodity price increase, and despite the same, our strategy of focusing on international projects, industrial projects, high technology plants and EP, which is engineering and procurement business, has helped in both execution excellence and improved operating margins. If you have a look at our revenue in the last few years, more than half of it has been from the international geographies, which is in line with our strategy to be a global player. Our order intakes in the past few years have been in line with our focus to remain a high technology business leader in desalination, reuse and recycle and effluent treatment business lines. Few examples of our reference projects include our on the desalination front, Reliance Jamnagar desalination plant and Senegal 50 MLD desalination plant, which were received in this quarter, has given further momentum to our desalination business. We are currently executing a 50 MLD desalination plant in Tunisia funded by KfW and have recently completed also a desalination plant for MRPL at Mangalore. Wabag was first to construct the largest operating 110 MLD municipal desalination plant in India on a DBO basis at Chennai. Of course, you all would already know about the 400 MLD Japanese-funded desalination project coming up in Chennai, where we are one of the 3 bidders. The bid is at the moment under evaluation. In the last year, we had a marquee order intake of $165 million towards the effluent treatment plant on zero liquid discharge basis from Russia, which was followed by an 18 million euro order this quarter from Delin. We have also completed effluent treatment plant for the largest single stream refinery in the world for Dangote, Nigeria, and also commissioned a large ETP for Petronas for their integrated refinery and petrochemical complex in Johor Bahru, Malaysia. We have been in the forefront of recycle reuse in India, both on municipal as well as industrial purposes. Our 45 MLD reference plant in Coimbatore, Chennai was inaugurated in 2019 by Honorable Chief Minister of Tamil Nadu, has been a key milestone in Chennai's recycle and reuse journey. We have recently also signed a concession agreement for a 40 MLD recycle reuse plant in Ghaziabad for Ghaziabad Nagar Nigam on a HAM basis. It's worth noting that Wabag already has to its credit constructing a direct portable reuse plant built in Namibia. While continuing to remain asset light, we have participated in capital project business by securing 4 HAM and BOOT projects, of which 3 projects in Kolkata, Ghaziabad and Bihar are already under execution. Our participation in and contribution to the Namami Gange mission of the Government of India has been significant. Our presence in the projects on a DBO basis and HAM basis under Namami Gange has been across the flow of Holy River Ganga. We also commissioned our first and largest STP under Namami Gange, a 40 MLD sewage treatment plant at Dinapur, Varanasi, which was inaugurated by Honorable Prime Minister of India. Currently, more than half a dozen projects are under various stages of execution. Once all these projects are completed, the Holy River's water quality will undergo a marked improvement. Our focus on developing the operation and maintenance business has also been reaping benefits for us, securing 2 projects under the One City, One Operator scheme for the city of Agra and Ghaziabad, the first of its kind in India. Our focus on developing a long-term O&M business through HAM and DBO projects have also been showing up in our order backlog, with O&M contributing over 30% in the order backlog today. Our business is about ESG, environment, social and governance. It is a unique opportunity for us to contribute positively to the environment as we further our objectives of value enrichment for all our stakeholders. These are only a few examples of our successful business strategy. Thus, our focus on industrial and international business, multilaterally funded projects, high technology desalination and recycle and reuse plants, asset light capital projects approach, cash accretive O&M business, continued focus on emerging geographies has enabled to improve margins and cash flows, enhanced quality of order book, delivered consistent profitable growth, enhanced shareholders and stakeholders value, become a globally respected water leader, and contribute positively and responsibly to the environment. Now let's move on to the key order intakes for this quarter. This quarter we have secured 2 large new orders in desalination segment. The first one, 50 MLD seawater RO plant in Senegal, which marks our entry into the country and enhances our global leadership position in desalination segment. This consortium order, which is funded by JICA and being built by SONES, the National Water Company of Senegal, is worth about 146 million euro, is to be executed in a consortium with Toyota Japan and Eiffage France. Wabag will play the role of technology and system integrator, while Eiffage will be responsible for construction work and Toyota will co-manage the project. Scope of Wabag under this order will be engineering and procurement and operation and maintenance, which is worth about 1/3 of the total consortium order value. Wabag's EP scope includes design and supply of electromechanical equipment, supervision of installation and commissioning, followed by a 2-year operation and maintenance of the plant. The plant will be based on seawater reverse osmosis technology with very advanced compact systems, considering the availability of land and challenging terrain. The second desalination order was from Reliance Industries, Gujarat, which is one of our key customers towards engineering, procurement, construction for a 53 MLD desalination plant at Jamnagar, Gujarat, worth about 430 crores. The scope of this project includes design, engineering, procurement, supply, construction, erection, pre-commissioning, commissioning, and performance guarantee trial runs of the seawater reverse osmosis plant, slated to be built in the premises of RIL's world-class refinery at Jamnagar, Gujarat. It's worth noting that Wabag has already executed a 24 MLD seawater RO plant in the same premises. This plant will employ state-of-art pretreatment in the form of lamella clarification, followed by filtration and ultrafiltration, and then followed by reverse osmosis technology to convert seawater into processed water. We also continued our foray into the Russian Federation market with a new engineering and procurement order worth about 18 million euro, about 149 crores of rupees, from Daelim, Korea, towards a water treatment package for Eurochem methanol production facility in Kingsep, Russia. Our scope includes design, engineering, and supply, installation, commissioning, and startup of the plant, and is scheduled to be completed over a 15-month period. The project will employ softening, ultrafiltration, reverse osmosis technology to treat brine, which will be reused as a processed water in the facility. This order includes adequate payment securities, which de-risk us from any geopolitical uncertainties. Ordering activities started assuming pace both in India and internationally, and this is reflective in our order booking for this quarter. We will continue our focus on technology-driven international orders and enhancing our presence in industrial water space, while continuing our delivery of best-in-class municipal water solutions. We are confident that Wabag will continue to remain a forefront runner in the oil and gas segment, reuse and recycle of water, and desalination solutions with our marquee references across the world. Coming to some of the key business updates, as you are aware, we secured an engineering and procurement order worth $165 million, which is about 1,200 crores from Amur Gas Chemical Complex LLC in Russia in H1 of FY22. AGCC is a joint venture of Sibur Holding, Russia, and China Petroleum and Chemical Corporation, Sinopec, China. Owing to the current geopolitical uncertainties in the region, customer had communicated a suspension of further activities of the project in April 2022. We are now happy to inform you that customer has now issued a notice of work to resume this project, which was communicated to the stock exchange immediately also. We have started remobilizing our resources, and very soon the pace of work on this project will reach the pre-suspension level. Russia is seen as a big opportunity market for us, as there is a space created by the European companies which are walking out of Russia, which is leaving a great opportunity for Wabag to replace them and complete the projects. So in the coming quarters and the years, we see Russia to be a good market for us to execute water projects. At our 300 MLD independent sewage treatment plant at New Jeddah Airport in Kingdom of Saudi Arabia, which is being built with the state-of-art Merida installation activities have started, and the plant is on track to start pre-commissioning activities towards end of FY23. In our KFW-funded Zarat project, seawater reverse osmosis plant of 50 MLD capacity, expandable to 100 MLD being executed for Soned in Tunisia. Mechanical and piping installation is currently underway. The project is progressing towards a start of pre-commissioning in FY23 itself. In our 187 MLD sewage treatment plant being built in Bali, Baranagar and Arupara in Kolkata for KMDA under the HAM model, we have crossed 70% of project execution phase and the project is progressing well. Equipment deliveries have commenced and we expect the project to get mechanical completed within this fiscal year. In our HAM project for Budco at Diga and Kankarabad, effective date has been announced and we have accordingly commenced our activities. It is important to note that the DBO portion of the project has already been progressing well. Our core business, which is water technology business, remains intact and continues to grow profitably. With a very high quality order book of over rupees 10,000 crores and a strong order pipeline visibility, we are confident of continuing to generate value for our stakeholders in our growth journey in the years to come. I would like to take this opportunity to express my sincere thanks to our direct and indirect employees and all the stakeholders for their continued support. Now we can move to the financial highlights and I would request Skanda to take you through the same. Over to you, Skanda.
Thank you, Mr. Mittal. Good evening, friends. Trust you had an opportunity to look at the results update presentation as circulated and uploaded on our website. Let me take you through the financial highlights for the quarter ended 30th June 2022. Our consolidated revenues stood at rupees 632 crore and on standalone basis revenue from operations was rupees 485 crores. The consolidated EBITDA for the period stood at rupees 52 crore, which was up by 30% year-over-year, and the standalone EBITDA for the period stood at rupees 46 crore, up by 75% year-over-year. We have delivered another quarter of profitable growth, which is our PAT growing faster than the rate our top line has been growing. The profit after tax attributable to owners stood at rupees 30 crore on consolidated basis, up by about 98% year-over-year. On a standalone basis, the profit after tax stood at rupees 25 crore, up by about 145% year-over-year. A look at the core metrics for the quarter, as we usually do. Core EBITDA stood at 11.5%, double-digit EBITDA margins as we have been indicating over our interactions earlier. Core PAT at 7.8%, demonstrating our continued control over finance cost through constant cash and debt management focus. Core return on capital employed, that is ROCE, was 21.4%, in line with our asset-like model and technology-focused approach. Mr. Mittal has already given a brief outline of our business strategy, and our numbers in this quarter are also reflective of the same. International business has been growing. In the quarter, 46% of our revenue was delivered from rest of the world and 54% was from India, in line with our strategy to remain a global player. Our order backlog stands at over 10,000 crores, with almost half of it coming from overseas geographies. Order book quality has enhanced. The quality of order book is enhanced with a majority mix of multilateral and central government funded projects, industrial projects backed by adequate payment securities, largely in desalination, wastewater treatment, including recycle and reuse and effluent treatment space. Over 30% of the order backlog today comes from cash accretive operation and maintenance business. Profitable growth. For the quarter, EBITDA grows by 30% and PAT by 98% on consolidated basis. Our asset-light approach continues with a 20% plus core ROC consistently and even in this quarter. In summary, we are a global leader in the high technology water treatment business. We have grown profitably and consistently so, and we have a strong revenue visibility from a quality order book of over rupees 10,000 crore. We express our heartfelt thanks to our bankers, investors, fellow Wabagites, and all other stakeholders for the continued support extended to us. With this, we now open the floor for question and answer.
Thank you so much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and one at this time. We take the first question from the line of Manish Maheshwari from Embark Capital. Please go ahead.
Hello.
Yeah.
Is my voice reaching you?
It is little bit louder if you speak better, but we can hear you.
So is it better now?
Yeah, please continue.
So there's an other income component of 33 crores reported for this particular quarter. Can you give me a segregation or a breakup? Last quarter it was 10 crores and last year
as we said, we are basically a global company. We export a lot of our thing. As we discussed, almost 50% of our income comes from rest of the world geographies and 50% from India. One of the income is all export related income, which are all in the fashion which government is giving us various duty drawback and export related benefits. The other is the finance income, which we have financial income because of various fixed deposits and the cash we have in the banks. And the last is the forex income, because we have our contracts in foreign exchange in dollars and euros as we bill, and when we receive, the difference in that goes into the other income. So these are the nature of other incomes.
So can you quantify these three items that you have mentioned over?
All, as you know, as I told you, I can quantify. There's no problem. My colleague will give me the numbers. But these are all operative incomes. These are all coming from the operation because we are a global player. These are not a non-operation or investment incomes. These are all related to our business incomes.
Okay. But
just to see, even if we take as our business, if we export anything, if we don't have an income in dollar, we will have to hedge it. At the rate we hedge the dollar, that is the rate at which we will take our income, and that portion will not appear in other income. But as per the accounting policy, when we get without hedging, we get this income, we put it in other operating income. Hence, I think this we should not spend too much time. It is only classified just from the accounting standard perspective, but it should be treated as a operating income.
Okay. So what is the net debt as on 30th June?
Just 1 minute, we'll give you.
And what was it 31st March FY22?
31st March FY22 was about 10 crores positive, and net debt as of 30th June 22 is about 70 crores negative. We have a net debt in June.
And FY22, March FY22, what was it?
It was net cash, 10 crores.
Okay. So could you give us a forward-looking number in terms of a guidance for the next quarter or maybe the second half?
In terms of what?
Guidance in terms of your revenues.
Generally, in the last 2 years since the onset of COVID, we have refrained from giving guidances. But I'm sure if you are an investor with us, you know how our first quarter comes. On that basis, you can always predict the rest of the year and the future quarters also. You know that the first quarter is always low quarter. As we go along, our second, third quarter will be more than that, and second half will be more than first half. This has been the trend in the company for so many years.
And how about the working capital cycle right now?
Sorry to interrupt. The participants are requested to restrict their questions to 2 questions per participant.
Hello?
So, Manish, I will answer this question. The working capital cycle is under control. It is similar to what we were in March. We have not had much of deviation from March. We are largely at levels similar to March, and it is under control.
And so last question, if you will. Since we are gung-ho on Russia and Europe, and we have sizable amount of order that we are executing. I think there was an order which got cancelled, and the order was again kind of,
As I just corrected here, we will not use the word cancel. We will use the word suspended.
Okay.
So it was suspended for about a couple of months. As I said in my speech, we got an intimation last month to restart, and now it's over a month that we are demobilizing and starting the complete order.
So how what is the game plan for sailing through markets like Russia and Europe given the uncertainty?
Uncertainty remains in everywhere. We are basically an emerging market player. Emerging markets will never be as certain as the developed markets. But there's a way of doing business, and we have been doing business. We know that if we go into this kind of markets, how to make the payment securities. Like in this market, we always do business with either a prepayment or with a letter of credit. And that policy will continue to happen as long as we have a prepayment or a letter of credit. We'll take these orders. If we have a deferred payment, we will not accept those orders. That has been a internal discipline, and we are continuing with that.
Thank you so much, sir. I'll come in the queue.
Yeah, please, Manish.
Let other participants also ask questions. Thank you, sir.
Sure,
Thank you
sure.
so much.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and one at this time. Participants who wish to ask a question may press star and one. We take the next question from the line of Manish Jain, an individual investor. Please go ahead.
Hello, what is the revenue guidance for FY22, FY23, sir?
Manish, there's a lot of disturbance.
Manish, the audio is good to speak.
Yeah, I'll try again. Manish, as I told to the earlier participant, now in last couple of years, we have not been giving any guidance, but you have been seeing that we have been growing year to year. So this growth will continue, keeping all the conditions favorable, no COVID-related lockdowns and all. Our growth journey will continue, and it will be always positive from this last year to this year.
Sir, at least there should be at least a double-digit revenue growth.
Yeah, your guess is not far off from what we have internal targets.
So double digits, sir, comes from 10 to 20. So what?
You asked for it. I didn't. You said double digit. So
But
I
sir,
will only tell you, yes, you are in that range.
But with this kind of order book and this kind of opportunity, I think we should grow a little bit more, and with this kind of a leadership position.
You feel that, we also feel that, obviously we'll go, because the team has been working hard. We excel in execution. Today we have most of them as EP orders, which is not so much construction related. So yes, we also would expect that we have a good order book, and these are executable order book. We don't have order book which is not executable, and all our HAM projects have also come on stream with announcement of effective date. So we expect that this year will be a good year.
With improved margins, sir?
Of course, that goes without saying. As my colleague, our CFO mentioned, we only work for profitable growth. Our margins will be higher than the percentage growth in margins will be higher than the percentage growth in our top line.
Sir, any important orders which are in the pipeline, sir?
Yeah, as I said, we have a very solid concrete pipeline. I also mentioned a number of times the Chennai desal large project has been discussed in this Concalls. I mentioned and gave you an update that yes, we have submitted the bid for the Chennai desal plant, and we are one of the 3 bidders. We fancy our chances, but we'll get to know in next couple of quarters.
Thank you, sir. Thank you very much.
You're welcome.
Thank you. A reminder to the participants, anyone who wishes to ask a question, please press star and one at this time. Participants who wish to ask a question are requested to press star and one at this time. We take the next question from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, if we look at your EBITDA margins, excluding the other income, then it has actually declined compared to earlier quarters. So how should we look at this going forward?
No, why you say it is declined and why you say you have to exclude the other income. Just now I explained to an earlier participant, our earlier income is completely operational income. Is it a crime to go abroad and do business in US dollar? If we are bringing into the country a forex exchange, and luckily that foreign exchange has grown for us, the Indian rupee has depreciated, it's very much part of our strategy of doing an international business. And if we do exports and the government of India gives us the export benefits, what is wrong with it? We calculate that in our margins when we take the order. Why first we should exclude the operating income? I would like to know from you, Anurag.
Yes, sir, I understand that part, but I wanted to understand if we include other income, then whether these kind of income or margins are sustainable directionally. Because
Why is it
forex
not?
can be highly volatile.
Suppose now we had closed the June quarter at whatever 79 rupees or dollar or something. Now suppose, Anurag, this dollar will come down to 77, 2 rupees I will lose in dollar. Would you tell me to exclude this from my EBITDA? Because that will be sunk into my this. This will not be shown as other losses in my total income. Because as per the accounting policy, that I will have to book it as a part of my cost. And then my EBITDA, will I be allowed to drop my EBITDA if I have a forex exchange loss?
No, sir, I understand that part. I'm not asking to exclude that. I'm just saying the forex part can be volatile. So just to understand, excluding that, how our expenses can pan out. That part I wanted to understand.
Still, even if you, for just theoretical purpose, you want to exclude all this other income, still we have positively grown on EBITDA excluding the so-called other income. There has been a positive growth.
Okay, that's it from
Bips we have grown on standalone and 200 bips we have grown on Concall in the contribution margin. And if you want to take on the EBITDA basis, about 100 bips on Concall and 200 bips on standalone.
Okay, that's it from my side. Thank you very much.
Thanks, Anurag.
Thank you. We take the next question from the line of Kaushik Poddar from KB Capital Markets Private Limited. Please go ahead.
Yeah, see, this time what we see is that your finance cost is down and basically finance cost is down. So can you please explain that?
Very simple. I think as my colleague said, we have reduced our debt. Okay, number one. The other thing is we have also reduced our borrowings. And on top of it, we have been able to discuss with the banks to reduce the interest cost and the bank guarantee cost. And this has enabled us to get some of the bank guarantees back also from the market for the completed projects. So the bank guarantees which were open in the previous quarters, some of them have got returned because the projects were completed. So hence the cost has come down. So hence our net interest cost for borrowing the money has come down, and also the bank charges for BG and LC, which are non-fund items, has also come down. Both have come down.
Okay. And this LC and bank guarantee charges, has it come down on a sustainable basis or is it a one-off?
It is normally we would expect that this will keep coming down. But if we get new contracts, if we get new orders, then we'll have to give fresh bank guarantees and fresh LCs have to be opened to complete the supplies. But if we don't have orders, then of course this will keep coming down. But we hope, and we in the business we always think that we will get new orders and some more bank guarantees will be required as going forward.
Okay. And my last question, see, in all these years, the Middle East was not doing well, but with the oil prices at what they are, hopefully there will be a much bigger opportunity. How strong are you in the Middle East?
I think very good question, Kaushik. One, I will definitely answer how strong we are in Middle East, definitely.
Yeah.
But with oil prices going up, generally the oil and gas sector globally will see a traction. both on the refining business as well as the petrochemical business, which is downstream of refinery.
Okay.
We are not only in India the largest player in oil and gas, we are one of the very few large players globally doing oil and gas.
Mm-hmm.
You know, we do regularly business with Reliance. You know, we have done business with Aramco in Saudi Arabia.
And also Petronas, I guess.
Yeah, we have done business with OMV, Austria. We have done business for Petronas,
yes,
which we completed few years back in Malaysia. Now we are doing business with Sibur in Russia.
Okay.
So I think we are extremely strong when it comes to oil and gas sector. So if oil prices are going, the affordability of oil companies will go up, and also we will see a good order intake into this oil and sector, not only in Middle East but globally. But this also not only in oil and gas, because the governments, especially in Middle East, will have a higher affordability because of the oil prices. They will also invest money into the infrastructure. Hence, the desalination and sewage treatment plant projects will also see a big traction there because their affordability will be high to invest into the infrastructure space.
Okay. Thank you. Thank you. And please try to upload the transcript of this Concall as soon as possible. Because right now, for example, I have to cut off so that I can read whatever is the transcript is.
Sure, Kaushik. We'll do that.
Okay. Thank you. Thank you.
Bye-bye.
Thank you. A reminder to the participants, anyone who wishes to ask a question will press star and 1 at this time. Participants, if you wish to ask a question, you will press star and 1. We take the next question from the line of Sandeep Sabarwal. Please go ahead.
Yeah, hi. My question essentially was that you gave the initial commentary, you gave project by project, the status of the projects, how they are getting executed, etc.
Your voice is not very clear. Can you please ask your question again?
One second. Hello. Yeah, my question is that when you gave the initial commentary, you gave project by project updates on how each project or each large project is doing, execution, etc. I'm sorry to be repetitive, but then if you are so closely tracking each of your projects, then at the end, as a summation, you should be able to give a cumulative of where you are likely to end up with. So I'm unable to understand why you don't have a clear visibility on your growth despite your order book as to what kind of growth you'll achieve. So it can be a wide range. It can be any range, but I think some sort of idea should be there for investors what they are looking for.
Sandeep, by not giving guidance doesn't mean that we don't track our projects, we don't have our internal targets, we don't discuss such things with our board, which is a very independent board. We do all that. But to give a guidance in such uncertain times, when one side you have the pandemic issues, whether it will pop up again, other side you have geopolitical issues, the third side has come, which is all the commodity price headwinds. All these factors, we don't know how they plan out. But given an ideal world, we have our targets and we will achieve it. We will go beyond that. Now, but to give a target under this uncertain times, we have taken a decision to refrain in the last 2 years. We have not given. But definitely we have target, and as an investor, you are tracking our company. I'm sure you know, as somebody said before, that we will definitely grow more than double digit. We will. We will be in that range. But
the only issue with the double-digit guidance is that double-digit is 10% to 99%. So then it again becomes quite vague. So in any case, you are not giving a guidance, that's fine. The other thing I wanted to ask was that, one, obviously the large Chennai desalination is something you are bidding for. In terms of a visibility of orders which you are bidding for, do you have any such visibility? Like, would it be, let's say, 3,000 crores at this stage, 5,000 crores, more than that, less than that? And what has typically been your success rate historically in your bidding process?
Sandeep, as we have discussed with some of the earlier participants, that the market is looking up. Globally, there is a good traction on the business opportunities available both on the industrial side as well as the municipal side. We discussed also that there is a good funds coming from multilateral agencies, which is our focus area, and also in Middle East, because of a high oil prices, their affordability to invest in infrastructure is substantially higher than what it was a few years back. So we see a good order intake coming in, and we always said that our order intake will always be more than our revenues, so that our order book keeps growing year on year. So if you ask me, whatever we did 3,000 crore last year, our order intake has to be much more than that, so that our order books will continue to grow.
No, my question was on your bidding pipeline, like what you're actually bidding for right now.
Our bidding will be at least 4 times of what we will expect to take, because our hit ratio has been in the range of 25 to 30%. So if we say we have a 4,000 crores order intake, we will bid at least for 20,000.
All right, thank you.
Sorry to interrupt. This is the operator here.
Yeah, please.
We take the next question
Please.
from the line of Shantanu Mantri from Think Investments. Please go ahead.
Yeah, hi sir. I am next 3, 4, 5 years. The opportunity is such that
Your voice is breaking, Shantanu.
Yeah, is it audible now?
Yeah, please try.
Very excited about the opportunity in the coming 5 years. The only thing I want to understand from you is, while our revenues will grow and whatever be the double digit, that is fine, and simultaneously our margins will also grow. So I just want some indication on cash flows. So just on a back of the paper calculation, say we do around 3,500 crores of top line and we take a 10% EBITDA margin, so that's around 350 crores of EBITDA. Now on this, what is the free cash that we can generate? So basically I'm trying to understand our working capital, that how much post that working capital can the company generate, and the consistency.
See, Shantanu, from a working capital perspective, if you just see what, and then you can track what we have been doing in the last 3 years, our core working capital has ranged between 50 to 70 days. That's been the range, and largely in the 50-55 days kind of level, and we've been able to maintain working capital at those levels. And our receivables have also been in control. Of course, we will have to fund projects to move forward, so the working capital will kind of have a crest and trough between H1 and H2. But eventually, at an annualized basis, we have stayed at 50 to 70 days kind of level, and our endeavor is to be below the 3-month kind of level in terms of our core working capital utilization. Last 2 years, if you see, we have been in positive cash closing. We were about 43 crores the year before. Last year, we closed at 10 crores. Last 2 years, we have reported positive operational cash flow as well. So there is no reason for us to believe that we will not be able to continue and consistently continue this as we move forward, especially with the quality of the orders that we are executing, the more EP orders that we are picking up, which will help us both in margins and cash flow. So we certainly believe that this is going to consistently be the case.
That's good to hear. And if you can just give an update on the Genco status. So as far as I understand, we provide around 60 to 65 crores yearly. So will that continue in FY23 till the time these we find a resolution? And if you can just for my understanding, just tell me what was the total number, what is the total provision we've done till date?
I think we can take this separately, but point is, both, as you know, they are under legal, and you know the legal activities have been slow, and both have not moved to any conclusion. And short answer is yes. If we go along, we will have to continue to provide, because as per the policy of India, ECL, economic credit loss, expected credit loss.
Correct.
We calculate that as per our auditor's guidance and our board approved policy. And you can expect, if we don't see a resolution, you will see that kind of number till we get a resolution to this legal cases.
Okay. And in terms of execution, I guess in one of the Gencos, we are yet to complete the project. So if you can just update, has that already been done, finished, or we still need to do some bit?
Yeah, I think as we have told earlier, we have not said this, this was not discussed in the last few quarters.
Right.
This project was already completed years back, and the plant has been producing power. Now, there were some residual non-core activities to be completed because of lack of funds. The client is also trying to do this on a piecemeal basis. We are doing some small jobs for them in terms of finishing works, but the plant is producing power for last, 4 or 5 years.
Right.
All finishing works like road, drains, painting, plastering, sort of things will keep on happening as and when they pay us, because we have decided that we will not fund anymore. It's cash and carry business. To the extent they will fund, we will execute, and that probably will continue for another year.
Okay. Got that. And just one last thing. A couple of people have asked this already. So we have this 33 crores of other income. While I completely understand what you're trying to say, I just wanted to know, of this 33 crores, we will be having a bit of, financial income, which is what we earn on a cash balance. So if you can give that portion, it'll be helpful.
Generally, based on some fixed deposits and other things we have, financial income will be about 1.5 to 2.5.
Okay, so not a big number. So basically, okay.
As I told one of the earlier participants, all our operative income. This comes from our projects, because we are international players, because our earning is in dollars and euro. Hence, most of this 95% of this income is operative.
Got that. Okay. Thank you so much, and all the best.
Just to add, it's not just unrealized. All these are also have components of realized income. So it should not be seen as non-operative perspective.
Yeah, I get that. Okay. Thank you. Thank you so much. That's it from my side.
Thank you. We take the next question from the line of Manish Jain, an individual investor. Please go ahead.
Sir, any upcoming big orders in the next weeks or months?
Yeah, I think this year, as we said, we have submitted quite a few large bids, both in India and international. And we fancy our chances, at least a few of them will realize and they will be in our favor. And I think we will share this as and when it happens in our quarterly calls.
Sir, when do you think this Chennai order will get finalized?
By end of this calendar year.
And okay, sir. Thank you. Thank you so much.
Thank you. We take the next question from the line of Manish Maheshwari from Wabag Capital. Please go ahead.
Sir, a quick follow-up. Sir, what is the update on Nal Se Jal?
I think the program is going on well. You know, this is basically a rural scheme, and this is done by mainly some of the construction companies, because it's basically laying of pipelines, which is not our forte nor our core area. We are not a construction to do this pipeline project. There are few projects which we are tracking. As and when it happens, we'll take it, but there has to be a technology portion in it. Then we will put in our bid, we will compete for it. But if it's purely or predominantly a construction portion, we'll stay away from it.
So we have not made any contribution as far as Nal Se Jal is concerned, right?
No, because I think you can track all this people who are doing. These are mainly laying of pipelines.
But sir, ultimately the idea is to get the water from the tap, right? Desalinated water from the tap.
Because desalinated water.
In India, 60%.
It can be a groundwater. It can be a river water. I have yet to see any single scheme of Nal Se Jal which is tapping a desalinated water. I'm yet to see. Or a recycled water. I'm not seeing that. It's basically God-given water. Either it's groundwater or it's surface water. And these are such a small quantities and such a small pipelines. This is only to be done by people who can dig the roads and lay the pipelines.
Okay. Thank you, sir.
Just to let you know, Manish, we have not even bid for it. Forget about it. We have not even bid for it, because for us it's been always no bid if there's no technology element into it.
Sir, a bit off the track, if I may ask you a question. So we are doing all things right, and there are a lot of tailwinds as you kind of have indicated. Sir, if we have every ingredient, sophisticated ingredients in place in terms of our business, right, etc., etc. Sir, why is it that the markets are not recognizing the same?
This is something you should answer. You are part of the market. We at management level, we do all things right. We focus on our business. We do things right. But it's up to the market how they perceive it, how they recognize it, how they value it. But from a business perspective, I can tell you we are doing everything right, and we are putting our head low and showing you the performance. And you have been seeing our performance even during the COVID years, last 2 years. We have performed far better. Even now, when the commodity prices are not a tailwind, but it's a headwind. Even against that, we are performing well.
I'm talking of going forward. Going forward, the tailwinds that you've kind of.
I'm sure there are hundreds of tailwinds. I fully agree with you, Manish. I am with you on the tailwinds. This is not a normal time for water sector. This is a beautiful time. We are buoyant about it and very bullish about it. because this sector is growing and government policies are very favorable for this sector. But we have to choose what projects we go, and that we are demonstrating with our business result, financial numbers, everything we are showing it to you. But how you value, how can I make that judgment? You have to value the business.
Sir, let's pray to God that markets recognizes our work sooner than later.
I think we all work towards it, and we'll be the happiest if market recognizes, because that's what we work for, to enhance the valuation so that our shareholders and stakeholders are benefited. That's what we work for.
Right. Because sir, I remember during the pandemic, our stock ticker virtually doubled from about 200 to north of 400, and then it came down as low as 220. Now it is somewhere, it's lingering around 250. So may God bless, as He is the only blesser.
Yeah, we pray every day.
All right, sir. Thank you, sir. Thank you so much.
Thank you. We take the next question from the line of Manish Jain. Please go ahead.
Sir, do you think the margins will improve further from here, sir? Because in the first quarter, the revenue was down, but the margins were up.
Yeah, I think our CFO mentioned this. I'll allow him to take this question.
Manish, if you see, I'd probably ask you to look at last 2-3 years. We have been consistently improving our core margins. At least 0.5% every year is what we have been improving. We were at 9.8 2 years back. Last year we were at 10.5, and now we are already at 11.5. So this is what Mr. Mittal also explained in his opening speech, where we focus on a strategy to deliver these margins in terms of going for EP projects, international projects, cash accretive projects, and all of these are helping. The asset-light approach that we take, the lower cash or rather the lower debt that we use in the business, efficient working capital management, all of these are helping margins both at EBITDA and PAT, and our focus will be to grow profitably. Again, I repeat, our rate of profit growth will be higher than the rate of revenue growth, and we will focus on cash accretive business, because these are the indicators for valuation, and this is what we have been focusing on and delivering in the last 3 years. And I am confident we will continue to deliver this and deliver this consistently.
So what was the reason for the revenue to go down in the first quarter, sir?
It's always a project mix, Manish. Ours is not a commodity business or manufacturing business. Ours is a project business, is a lumpy business. So we cannot be seen as a quarter-on-quarter company, and when we got listed, we used to educate this regularly. And we are more focusing on EP projects, which are engineering and procurement. Earlier we used to tell you there is EPC. The C part we are consciously trying to reduce from our order intake, because C part was almost like a pass-through in our books. So we are trying to see, can we reduce consistently year on year the C part, so that we do what we are good at, rather than trying to pass some revenue from our books where we don't add a lot of value. So that's the reason confidently we are saying our bottom line will grow faster than the top line.
Sir, in the last 3 months compared to the previous 3 months, how much commodity prices have come down, and in percentage for our kind of business, sir? Generally?
We don't see on quarter again, Manish, to repeat. Our businesses are 2 years, 3 year, 4 year execution cycle. The projects which we are executing now, we may have booked 2 years back, 1 year back, 1.5 years back. So those time commodity prices and this now commodity prices are in the range of 30% higher. Now we are lucky that all the municipal contracts which we have, because they are long-term 2-3 year contracts, we have a escalation clause. A part of our escalation is covered by the client through the escalation clause. And we are also been very lucky. Now this nobody is talking. When we have international jobs, we don't have an escalation clause, but we have been very lucky because the dollar has been very beneficial to us. So whatever commodity prices have grown or increased, we have been able to either through escalation clause or through forex. We have been able to get, and that's the reason our margins remains very robust.
But sir, after this recent commodity meltdown, commodity prices or raw material prices for us from here on, it should be a tailwind.
If it is remaining steady, that's the best thing we can do. Because we are also bidding every quarter projects, taking the latest prices. And if they don't grow from here, I think it's the best we can ask for. If they come down further, we'll benefit from it.
Thank you so much, sir. Thank you very much.
Thank you. As there are no further questions, I now hand the conference over to Mr. Rajiv Mittal for closing comments. Over to you, sir.
Thank you everyone for your participation in our Q1 FY23 earnings call. We have uploaded the analyst presentation in our website. In case you have any further queries, you may get in touch with Stellar IR Advisors, our investor relation advisor based in Mumbai, or feel free to get in touch with us directly. Thank you. Bye-bye.
Thank you. On behalf of VA Tech Wabag Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.